Right, let's go. Righto, we've got a special guest, our first ever special guest on Money of Mine that's dialed in. And look, we've gone straight to the top. I'd like to thank Phil Wilding from Westgold Resources for teeing this up for us. Wayne Bramwell, MD of Westgold. How are you, Cobber?
I'm fantastic today, guys. Thanks for the opportunity to help out and chat. I've been listening to your podcast. I'm loving the colour and personality that you guys are bringing to that medium.
Oh, that's great feedback. We're pretty stoked to hear that.
Beautiful, mate. We're always glad to know someone's bloody listening to it. So, well, it's in line with your announcement today with your quarterly production results and seeing you trending towards upper level of guidance for FY23. Mate, well done on, I guess, the Westgold turnaround, the cash. You're in a great cash position. We've got a few questions to fire at you today from the Money of Mine team. Look, what have been the big, aside from the elevated gold price, I guess the operational drivers behind this cash turnaround for Westgold?
Look, thanks for that. It's been really simple. We've been on a mission here where simplicity drives efficiency, drives profitability. Last year we had quite a complicated business, a lot of moving parts. This year it's much simpler business for us to manage and for the people to operate. We've gone from 6 underground mines plus a 7th in development last year, plus open pits, now to focus on 4 underground assets only. And that simplifying the business is starting to see improvements in inefficiencies and profitability. And
to a non-miner like me, Wayne, what is when you say you cut down the number of underground mines? Is it you're just getting benefits of scale there? Is it cost savings on diesel where it wasn't making sense before? Or what drives the efficiency improvements there?
Yeah, it's a really good question. It's actually both. I mean, last year, obviously WA COVID was still putting pressure on the workforce. We just had trying to do too much with too few, effectively. I mean, all those mines were understaffed, certainly fully equipped, but understaffed. So being able to close 3 mines and redeploying the equipment and the people back into 4 mines, all of a sudden we're starting to get some efficiencies. Instead of having operating teams which were 10 or 15% short, and more often than not now they're fully staffed and fully equipped, starting to find some momentum in the business. And also what we never did in the past was really leverage our scale. We're really now starting to be far more commercial on what we consume and what we buy, and we're starting to play to our strengths now, which we are a mid-tier corporate, but in some sense we were operating like lots of different individual mines which were individually doing their own thing. Now there's a far more consistency across the organisation, and operating discipline is something we talk about every day.
Wayne, the Big Bell expansion, the announcement, the study you're looking at to go deep, go to the long hole open stoping method below the current cave, below that inconvenient dike that decided to be in the ground. Mate, could you give us a bit of a scope on that project and especially, I guess, how you're going to look at managing the stresses at the increasing depth?
Look. When we originally started to drill deeper under the cave and we started to hit this pegmatite, we were a bit concerned about what would be on the other side. So
what's the lithium grade, mate? Is there any lithium in it you can rip out?
No, sadly, we have assayed for that like demons, and we've got, and there are not all lithium, not all pegmatites have valuable lithium in it. This one doesn't, sadly. So what it is going to become is pretty much has become an opportunity for us. Where it is at the bottom of the cave separates the ground stress from the cave to what's underneath it. So it's actually become like a crown pillar or a floor between the cave and the long hole operation we propose underneath. So what we thought was a problem is actually become a benefit for us because it does separate the stress regimes between these 2 mines above and below.
And what's the long-term outlook? It's going to be a paste fill pillarless operation. Is that still the scope?
Paste fill. Yeah, basically we've been running paste test work now for some time. Those results have just come in, so that's looking pretty good. So really keep running the cave above, long hole open stope using paste underneath. So the study that we're doing now, this PFS, is really quantifying how we fill it and the costs and capital associated with what that long hole operation will look like.
Is there a time frame on when that study might be getting to the end or becoming where a final decision will be made?
Certainly. The plan as it is now is to have that available for board review during Q4, which we're in now. And I suspect, particularly after some of the drilling that we've done deeper below where we're currently projecting this long hole, I mean, that last drill hit 50 odd metres at 5 is really raising our expectations about that decision. I mean, our concerns over Big Bell are certainly diminishing, and that's a great place to be, because this was obviously a project which has had a long history. We didn't know what was going to happen underneath the pegmatite. We've now got far more clarity over a much longer term mine life there.
Well, it's your flagship producing asset now, and I guess it's all the hard work's paying off. Now, Wayne, the bankers I've got here are keen to grill you about the finance stuff, mate. I'll hand over the mining. Appreciate all the mining questions.
The mining questions inform the finance questions, mate. No, I appreciate you taking the time to speak with us, Wayne. Credit to you. And I'm pretty curious about, this strategy is focusing on less is more. And
you got it.
I wonder if that plays into your plans, if at all, for regional consolidation. The latest half-year reporting, you've still got shares in Alto and Musgrave, and I assume that they were strategic interests with a bit more of a potential optionality around some regional consolidation plays. Is that on the burner now, or how do you think about regional consolidation?
Look, we keep a weathered eye on our peers in the neighbourhood, and clearly those investments were made at a different time when we probably had a different view of what an economic scale mine looked like. For us, this FY23 focus is very much about cash flow or free cash, putting some more fuel in the tank, because I can just see broader and bigger opportunities emerging in the gold sector. I mean, the bottom line is, if you're an explorer in the space at the moment, between Q and Meekatharra, be very hard to get finance to build another mill. And we've currently got 2 large mills that are already paid for and operating. So I haven't answered that very well, other than to say that the immediate focus, free cash flow, puts some more fuel in the tank, gives us opportunities on a broader scale going into FY24.
Perfect.
That was a terrible answer. I know.
No, that's exactly how you expect the managing director to answer the question without answering the question.
Sorry about
that. You don't want to influence markets.
You've seen straight through me on that one.
I was being cheeky asking it.
I heard the Liberal Party's looking for a new leader. Wayne,
are they still a thing? I don't know.
Well, I think the free cash flow idea does flow on well to what I'm going to ask you about. So just want to hear whether there's sort of plans you've put out to market regarding CapEx, as that's sort of looking to come down over the next financial year, and how that looks over, say, the next 2 or 3 financial years, and flowing on from there, what that sort of looks like with regards to dividend policy or capital distributions in whatever form.
Okay, let me unpack that a little bit. A couple of the previous financial years, FY21, 22, Westgold had capital expenditures of north of $150 million for each of those financial years. We're sort of guiding towards sort of 60 for this year, and it sort of shows a maturing of the assets, and it's a key point in comparison to some of our peers. We don't have deep mines. We don't have mines that are 1.5 kilometres deep. Our mines are shallow, are reasonably young. We're fully equipped. So mobile fleet, we've got 131 pieces of heavy underground gear, which we own. We don't have massive expenditure planned for the next couple of years. I certainly won't guide towards capital for FY24 and 25, other to say that the days of us being north of 150 are behind us. The assets have had significant investment over the last couple of years, and we're starting to get the benefit for those investments now. Dividend policy, we did pay a dividend in FY21. I think we paid 2 cents fully franked. Would like to do that again. I think if we're successful, it's only fair to provide some more returns to the shareholders. So long term, the policy is 30% of our net profit after tax at full board discretion. But again, at the moment, that would be a first world problem to have a big pile to be sitting on a big pile of cash that we have optionality over acquisitions or investment in things like Great Fingal or expanding Big Bell or Bluebird faster, or giving some back to the shareholders. So that's where we're trying to get to a point where we can have those discussions about what are we going to do with all this cash.
Great. Thank you.
I've got one more question, and in the last couple of days, Wayne, we've seen a few companies, they put out these quarterly production announcements, but it comes before the actual quarterly. And I think our listeners would probably appreciate just the insight as to the rationale when you're thinking about releasing these production numbers to the market before the actual quarterly comes out. Sure. What drives a decision like that internally?
Look, it's a fantastic question, and we've had this sort of corporate model, and we're no different than others, whereby, in my mind, you make the shareholders sweat for a month after the end of the quarter because it takes some time to get the financials together. I think in some sense it takes a lot of stress out of the process for shareholders and management as well, because you can reconcile your production within 2 to 3 days, or maybe 5 days towards the end of the month. So going early allows the analysts to get on top of your production sooner. It takes a lot of the stress and the anxiety of waiting another 26 to 30 days before your financials come. And from my perspective, it's just a step in trying to be more transparent with what we do here. Try and keep a regular news flow, front up, good or bad, as quickly as you can every quarter. We set up these analyst calls and shareholder calls now whereby the Q&A function is we're getting really strong engagement with, and that's just building trust in the stock because people see us communicating better with the shareholders in the market.
Well, Wayne, mate, we're going to make a T-shirt for you since you're the first MD to dial in the history of the podcast, mate. Look, if we make the big time, that's going to be your claim to fame. If you even surpass your MD role at Westgold, I think, mate. So we can't tell you how much we appreciate you coming on for a yarn, mate.
And Wayne, my good mate Kenny, he's been ripping into me. When are you going to talk about Westgold? When are you going to talk about Westgold? Well, Kenny, we've got Wayne on.
We've taken it to a new level.
Thanks for your time, Wayne.
It's a proud day for me to be number one. Happy to wear the T-shirt and get some photos of you guys, but you're going to have to use a really soft filter on my head.
Mate, there's AI and stuff these days. We'll be fine. Well, mate, we'll head into West Perth and we'll catch you for a brew sometime, mate. Thanks very much for coming on.
Keep up the great work. Well done.
Good on you, Wayne. Cheers, mate.
Thanks again. See you later.
All right, good on you, Wayne. What a bloody absolute cracking bloke. What an absolute gentleman. So hopefully the start of many more MDs to come on the show. So
I think we got a medium here where an MD can come on and be relatable and talk to their investors just like a real person as opposed to via an ASX announcement. So we're keen to facilitate more conversations like that. So reach out to us.
And it's bloody free. Like, well, what more can you offer?
Oh, no, don't say that, mate. We want to charge.
For the moment. Wayne was free. They're all free at the moment. Maybe not forever.